What is ESG investing? What impact is your investment making? What is ESG investing? ESG stands for environmental, social, and governance. ESG investing refers to how companies score on these responsibility metrics and standards for potential investments. Environmental criteria gauge how a company safeguards the environment. Social criteria examine how it manages relationships with employees, suppliers, customers, and communities. Governance measures a company's leadership, executive pay, audits, internal controls, and shareholder rights. Key takeaways: environmental, social, and governance (ESG). Investing is used to screen investments based on corporate policies and to encourage companies to act responsibly. Many brokerage firms offer investment products that employ ESG principles. ESG investing can help portfolios avoid holding companies engaged in risky or unethical practices. Investopedia/Julie Bang. How ESG investing works. ESG investing is sometimes referred to as sustainable investing, responsible investing, impact investing, or socially responsible investing, SRI. To assess a company based on ESG criteria, investors look at a broad range of behaviors and policies. ESG investors seek to ensure the companies they fund are responsible stewards of the environment, good corporate citizens, and led by accountable managers based on criteria including environmental. Investors evaluate corporate climate policies, energy use, waste, pollution, natural resource conservation, and treatment of animals. Considerations may include direct and indirect greenhouse gas emissions, management of toxic waste, and compliance with environmental regulations. Point 1. Social. A company's relationships with internal and external stakeholders are evaluated. Point 2. Does the company donate a percentage of profits to the local community or encourage employees to volunteer? Do workplace conditions reflect a high regard for employees' health and safety? Governance ensures a company uses accurate and transparent accounting methods, pursues integrity and diversity in selecting its leadership, and is accountable to shareholders. Point 3. ESG investors may require assurances that companies avoid conflicts of interest in their choice of board members and senior executives. Don't use political contributions to obtain preferential treatment or engage in illegal conduct. ESG investors help inform the investment choices of large institutional investors, such as public pension funds. ESG-specific mutual funds and ETFs reached a record $480 billion EUM in 2023. Point 4. Brokerage and mutual fund companies offer exchange-traded funds, ETFs, and other financial products that follow ESG investing strategies. Robo-advisors, including Betterment and Wealthfront, have promoted these ESG-themed offerings to younger investors. ESG metrics. Investment firms like Boston-based Trillium Asset Management use a variety of ESG factors to help identify companies positioned for strong long-term performance. The criteria are set by analysts who identify the relevant issues facing specific sectors, industries, and companies. Point 5. Take the next step to invest. Chung. The offers that appear in this table are from partnerships from which Investopedia receives compensation. This compensation may impact how and where listings appear. Investopedia does not include all offers available in the marketplace. Trillium's ESG criteria preclude investments in companies that operate in high-risk areas or have exposure to coal or hard rock mining, nuclear or coal power, private prisons, agricultural biotechnology, tobacco, tar sands, or weapons and firearms. They do not invest in companies involved in major or recent controversies over human rights, animal welfare, environmental concerns, governance issues, or product safety. Point 5. Trillium's metrics include investments in companies that support the environment through renewable energy sources and publish sustainability reports. Social metrics include companies that operate ethical supply chains and avoid overseas labor with questionable workplace or child labor policies. Metrics for governance require companies to embrace diversity on the board of directors and maintain corporate transparency